Hello, my fellow investors. Today, we will break down implications of the Bank of Japan's surprise interest rate hike last week. First, let's set the stage on Japan's crazy interest rate environment over the past decade. Since 2016, the BOJ has kept interest rates at negative 0.1% under an unprecedented monetary easing program. The goal was to finally jolt the economy out of decades of deflation and stagnant growth. For over 8 years, Japan was the last remaining developed nation with negative rates as other central banks normalized policy. Despite its extremes, Japan's negative rate experiment ultimately failed to spark sustainable inflation. Price pressures remained stubbornly low until external shocks like COVID and the Ukraine war. This forced the BOJ's hand to a policy pivot, raising rates by 0.25% to 0.1% last week. So what are the major ripple effects of this pivot? Let's break it down. Number 1, global investment flows. Japanese investors have over $4 trillion parked overseas in assets like US treasuries, European utilities, Singapore equities, and more. There are fears this ultra-low-yielding money could get repatriated back to Japan, disrupting global markets. However, analysts think the BOJ's gradual approach will limit a destabilizing outflow for now. Number 2, Japan's indebted economy. Higher borrowing costs are a double-edged sword for Japan's heavily indebted economy. On one side, it risks stalling the fragile recovery and hitting over-leveraged zombie firms and consumers. But it also gives reprieve to long-suffering banks finally earning interest income again. Number 3, the government's debt burden. Japan's public debt is over 260% of GDP, the highest in the developed world. The BOJ currently owns over half of all government bonds after years of asset buying. Higher rates immediately increase debt servicing costs, putting pressure on fiscal spending. Number 4, political implications. PM Kishida can declare victory over deflation, boosting his re-election chances. But if higher rates derail the recovery, it could sink his approval ratings further. Number 5, bond market impact. After years of rock-bottom yields and trading volumes, Japan's $7 trillion JGB market is set for a volatility supernova. This spells opportunity for rates traders, but also risk if the BOJ misjudges the path ahead. So there you have it. While pitched as a small move, this rate liftoff by the BOJ has major implications rippling through Japan and global markets. What's your take on this? Drop your comments below, subscribe and like if you want me to keep breaking down these huge market shifts and for more hot analysis on where the investment markets are heading.